What's up, guys? On our next installment of How to Start Investing, we're going to talk about three things. First, let's talk about indexes, what they are and what they actually mean to you as an investor. You see Dow Jones, NASDAQ, S&P, when you're watching these financial shows and don't know what they mean, all they are just indexes showing you how the market is doing, and it's basically a reflection of how the economy is doing. The Dow Jones Industrial Average, it tracks the 30 largest companies in the world, 30 largest industries, like the oil industry, like the farming industry, just commodities, things like that. The S&P 500 tracks the 500 largest companies regardless of industry. The NASDAQ, it's a tech index. It gauges the semiconductors, the software companies, things of that nature. So those are what indexes are. Indexes basically are a grading scale for the economy and the stocks. Now, let's talk about the next thing. Investors or traders. You need to find out which one you are. Let's talk about the trader first. The trader pretty much lives for the day. That's the person you see on TV who buy, sell, looking at the ticker. It's going up, it's going down. We need to get in, we need to get out. So the trader has a very short-term temporary position. I want to buy as much as I can in one day, and I want to make sure this price goes up and sell it all in one day and get that profit. So think about it as a liquidation sale. I want to buy 100 shares of something, $100 a piece, and I want to sell it at $105 a piece. And that difference between the 100 and the 105, that's what I take home for the day. So that's what a trader is. A trader is just actually just moving, they're moving quantities, they're moving stocks within a day. They're not really investing in anything. They just hear a company's going to do good for a day, so they buy a lot of it, and once they increases from where they bought it to a new price, that's when they sell out and they cash out. The investor, on the other hand, is buying for the long term. They're buying for the long run. They're going to accumulate wealth over time. So think about it like planting trees. Think about it like, excuse me, let's see who this is calling. I guess if it's not Warren Buffett, then we need to go. But anyway, the investor is planting trees and planting for the long term. What they're doing is buying into a company because they want to own the company. They love how the company works. They love how the company makes money. So they want to be a part of it long term. So the long term process of it is less risky, but it will take you longer to accumulate this wealth. As a trader would, one day you can make 500, you can make 1,000, or you can lose money. It's very risky. With the investor, you're just constantly just building your position into a company that you actually want to own, physically own, because that's what you're doing when you're investing. Now, speaking of companies to own and different stocks, you have two different main stocks. You have growth stocks, dividend stocks. Growth stocks are basically speculations, basically companies that can really pop, just up and coming companies like your biomedical companies, like your tech companies, your marijuana companies. Those type of companies right there, people don't really know if they're going to pop, but they're not that expensive, so you can invest into them and see if you can get a high reward. But with the high reward comes a high risk, because since we don't know these companies' potential, we don't know if these companies are really going to make it, then they can just fizzle out, because these are typically smaller companies that don't have the financial backing that a blue chip or an established company would have. So when you're younger, you do want to go with growth stocks more, because once you're younger and you're investing, you're able to take more chances than a person would as they're older. So a growth stock is more of a risk than a blue chip stock, but it can pay off. It can pay off substantially if you really hit. Now, let's talk about a sustainable group or a sustainable company or type of stock that's called dividends. What dividends do is they pretty much share the profits with the shareholders as you go. because they're not going to pop. They're not going to triple their money or anything. They're where they are. They're sustainable companies. Your AT&Ts, Coca-Colas, McDonald's. They're not going anywhere, but they're not going to make huge leaps and bounds financially. So what they're going to do is every 3 months, I'm going to give you some money. I'm going to share some of the money that we made with you to keep your money invested with us. Now, this is a huge tool for passive income, and I will go deeper into dividends on another video, and I'll go deeper into growth stocks on another video. But those two are significantly different, to where dividends are, just your blue chip. We've been here for 100 years company. Growth stock is we're starting and we're trying to make a big jump. My biggest example of growth stock would be Uber. My biggest example of a dividend stock would be Coca-Cola. You see the difference between the two? One's just got here, one's been here forever. So let's recap. We talked about indexes, the Dow Jones, the NASDAQ, the S&P 500, just a grading scale for these stocks and the industries. The second thing we talked about is investing or trading. You have to find out who you are, whether you're an investor who's investing for the long haul, or trading and you're just in it for the day, or just very, very short term. High risk, high reward, long-term success, whatever one you want. The last one, you have growth stocks, dividend stocks. The same thing with investing and trading. Growth stocks, high risk, high reward, dividends, long-term sustainability. So those are the different type of stocks, and these are some basic concepts that'll keep you going on your journey of investing. If you like this video, hit the like button and subscribe. You can follow us on social media at Ben Elite Investment Club and at The Idea Factory LLC. So look, keep investing, and we look forward to seeing you next time. Peace.